Hello, guys. Welcome to Clarity for Sure. And I welcome you all to today's session where we will be discussing about the most important schemes from the ESI perspective. Okay, so this will be the part 1 of the schemes which will be included. So let's see about the schemes then. So first of all, we will be talking about, and this in this session, we will be talking about the schemes ministry wise. Okay, the most important scheme from the different ministries. The first ministry that we will be talking about is the Ministry of Finance. So, from the Ministry of Finance, the foremost scheme that we'll be discussing is the Jan Dhan Yojana. And you know that Jan Dhan Yojana has completed 11 years, right? So, when was it launched? 28th of August 2014. So, whenever you cover any scheme, obviously you'll have to know the launch date, right? And then you have to know which ministry, then what is the objective of the scheme, or if there are any taglines, right? Then the current status of the particular scheme and any new innovations or any new uh, you know objectives or something. Then also you have to know about the outlay, right? So accordingly we will see on that lines only we'll be discussing today the different schemes. The first scheme that we'll be discussing is the Ministry of Finance scheme, Jan Dhan Yojana, right? So when was it launched? 28th of August 2014. That is, it has completed 11 years. So what is the tagline? The tagline is banking the unbanked, securing the unsecured, funding the unfunded, and serving the unserved. So it is the National Mission for Financial Inclusion, right? The foundational aim is to provide every Indian adult with a bank account, financial identity, and access to banking services, the basic banking services like savings, credit, insurance, as well as pension. Right? It is one of the world's largest financial inclusion schemes, and also at the time of opening, it had a Guinness World Record of opening the highest number of bank accounts in 1 week. Okay. Now, important, this is the current affair part, wherein you will see as of 2025, August 2025, what is the total number of accounts in Jan Dhan Yojana? 56.16 crore, right? And out of these 56.16 crores, 67% accounts have been opened in rural and semi-urban areas, whereas 33% accounts have been opened in urban and metro areas. And out of these 56.16 crore total accounts, 56% accounts are owned by what? Women, right? And the total deposit in these 56.16 crore accounts are, that is 2.67 lakh crore. Okay? Okay, you have to remember this data, 56.16 crore total accounts with deposit of 2.67 lakh crore. And out of this, 67% accounts are opened in rural semi-urban areas and 56% accounts are opened by women, right? Then if you see, these are the types of accounts which are there. Okay, basic savings account. What type of account is open? Basic savings bank deposit account. And if you talk about the small account of Chota Khata, it is the account for individuals who do not have any valid KYC documents. So these accounts will be valid for 12 months, and after 12 months, they can be extended only if application for officially valid document is being submitted. Okay. So these are the two types of accounts that can be opened in case of PM Jan Dhan Yojana. All right. Next, we'll see that there is an accident insurance cover. You know that 2 lakh accident insurance cover overdraft facility of 10,000 rupees is available for all eligible account holders. Right. Also, what are the other things that you can see? That it also enables direct benefit transfer for 327 government schemes. Right. And what are the linked schemes? This is important. What are the linked schemes to Jan Dhan Yojana? That is Jeevan Jyoti Bima Yojana, Suraksha Bima Yojana, Atal Pension Yojana, Mudra Yojana. Right, all these kind of social security schemes are involved or linked to Jan Dhan Yojana. Then there was this in 2025, National Financial Coverage Campaign was launched from 1st of July to 30th of September, okay, in order to saturate Jan Dhan Yojana, Jeevan Jyoti Bima Yojana, Suraksha Bima Yojana, Atal Pension Yojana in every Gram Panchayat and urban local body. Okay. And because of these national financial coverage campaign, 6.6 lakh new Jan Dhan accounts were opened and 22.65 lakh new enrollments were seen under the Jan Suraksha scheme. So this 6.6 lakh and this 22.65 lakh. These are the result of this national financial coverage campaign. Okay. Then if you see that this Jan Dhan Yojana has catalyzed mass adoption of digital banking, helped make India a global leader in real-time payments, right? And what else can be seen in here? Why is Jan Dhan Yojana considered a model scheme? Because it is the largest inclusion program, right? Largest inclusion program, robust digital banking backbone, works as a foundation layer for all the new social security schemes, as well as it builds a national framework of financial empowerment. Okay, so these are the most important points of Jan Dhan Yojana that I have reiterated from this particular document. Okay. Next, let's move to Jeevan Jyoti Bima Yojana. So again, when was it launched? 9th of May 2015. So this year this becomes important. Why? Because it has completed a decade, right? In 2025, Jeevan Jyoti Bima Yojana, Suraksha Bima Yojana, Atal Pension Yojana has completed a decade. The objective is what? That is to provide affordable life insurance coverage to low income and uninsured sections of the society. So, who will be administering this particular scheme? That is LIC. But since it is Jeevan Jyoti Bima, so LIC and other approved life insurance companies as well. Okay, and the banks and the post offices will act as the master policy holders. Who are the target beneficiaries? So individuals with a valid bank or post office accounts, right? And what should be the age? Eligibility condition also includes the age. See, age criteria is what 18 to 50 years for entry. Okay, under Jeevan Jyoti Bima Yojana, the age of entry is what 18 to 50 years, and the coverage continues up to 55 years if enrolled before the age of 50. Okay. Then, if you see about the coverage details, that it provides 2 lakh life insurance payout in case the insured person's death from any cause, either natural or accidental death due to any cause, then life insurance of 2 lakhs is paid out. Okay. Premium details, it is 436 per year, right? Which would be auto debited. That is another thing, that this 436 per year would be auto debited from the subscriber's bank or post office account. But there is also, if you see, if somebody enters mid year, right? If somebody enters into the scheme mid-year, then there is a pro rata premium that will be applicable. So pro rata, if you see, if the person enters in the months of June, July, August, then they will pay a full premium of 436. If the person enters into the scheme in the months of September, October, November, okay, September, October, November, then he will have to pay the first premium as 342. Then if the person enters in December, January, February, then it's 228 first premium. And if the person enters in March, April, May, then the first premium will be 114. Thereafter, from June, the premium of 436 will apply. Okay, this pro rata premium is only for the first entry, the first premium, right? Okay. Next, if you see about the renewal rules, so the coverage period of this particular scheme is 1st of June to 31st of May each year, and there is annual renewal required through auto debit. Okay. So a person can enroll only once if even if there are multiple saving accounts exist, but he can enroll only once. There is this 30-day lean period from the date of enrollment, no claim for non-accidental death during this period. Okay. And this 30-day lean will be applicable to new subscribers, to re-entrants, and also for late renewals. Exit and entry rules. The subscribers may exit anytime. Rejoining is allowed, but they will have to this even if they rejoin, then this 30-day lean clause will be activated. Okay. Next, if you see that the impact, okay. So 23.36 crore cumulative enrollments have been made so far. 9,37,524 claims have been filed, right? And the total claim disbursement is 18,102 crore. Women beneficiaries, if you see out of the total subscribers, there are 53% women subscribers. And rural coverage, if you see, over 72% subscribers belongs to the rural areas. Okay. Then, if you see about the common reasons for termination of coverage, that is age crossing 55 years, bank account closure, and duplicate enrollments. Okay, because of this, there is what termination of the coverage. So these are the most important points from Jeevan Jyoti Bima Yojana. Next, let us say about Suraksha Bima Yojana. So under Suraksha Bima Yojana, this is what this is the accident insurance scheme. So Jeevan Jyoti Bima Yojana was the life insurance scheme, and Suraksha Bima Yojana is the accident insurance scheme launched on the same date, 9th of May 2015, is implemented through Ministry of Finance, and the execution is by public general insurance companies like Oriental, New India Assurance, United India, NICL. So this kind of general insurance companies. So we have seen Jeevan Jyoti Bima Yojana, LIC, and the other approved life insurance companies. And in case of Suraksha Bima Yojana, it is what? It is the public sector general insurance companies. Okay. उसके बाद आता है the objective, that is to provide an affordable accidental death and disability insurance to the low income and unserved underserved population segments of India. So what was the background of this particular scheme? That there has been a very low penetration of insurance in India before 2015. Before 2015, okay, and the large economically vulnerable population excluded from financial safety nets, part of government's Jan Suraksha Trinity, that is Jeevan Jyoti Bima Yojana, Suraksha Bima Yojana, and Atal Pension Yojana, right? The target population is what? That is poor, lower income, informal sector workers. Poor, lower income, informal sector workers are the target population. Again, if you see regarding the eligibility, that is aged 18 to 70 years. Okay, individual aged 18 to 70 years must have a savings bank or post office account, must give consent for auto debit. Other recommendations as per what? Primary KYC. So in Jeevan Jyoti Bima Yojana, the age limit was what? In Jeevan Jyoti Bima Yojana, the age limit was 18 to 50 years, right? 18 to 50 years, and the coverage would be available up to 55 years if entered before 50 years, right? And in this case, that is Suraksha Bima Yojana, the age is what? 18 to 70 years. Okay, other things are same like auto debit consent or savings bank account, post office account, primary KYC. These things are same, but the age is different. Okay, again, single account rule applies in here also, and nature of cover also applies here. This is a 1 year accident insurance cover, whereas Jeevan Jyoti Yojana was 1 year life insurance cover. Okay, renewable every year from the 1st of June to 31st of May. Now, if you talk about the Suraksha Bima Yojana premium amount, so this is rupees 20 per year per subscriber. Okay, it is 20 per year per subscriber. Next, what is the benefit? Okay, so 2 lakh rupees in case of accidental death, 2 lakh rupees in case of total irrecoverable loss of both eyes, hands, feet. Okay, and 1 lakh rupees in case of partial disable. Then coverage period, if you see, as I've told you already, the coverage period is 1st of June to 31st of May each year. Now, why there will be termination of cover? Okay, that is if the member turns 70 years, insufficient balance for premium deduction, account has been closed, or there is duplicate enrollment. So just the difference from Jeevan Jyoti Bima Yojana and Suraksha Bima Yojana is this 70 years and 55 years, right? Okay. Again, same thing with re-entry. If a person drops out due to insufficient balance or any other reasons, then he can continue or rejoin anytime. Uh, just he'll have to pay the premium. He'll has to start. He can re-enter that. Okay, just by paying the premium. Okay. And next is about the digital assessment portal. So Jan Suraksha platform is there, wherein all the details regarding the information, all the information would be available, right? Regarding the scheme will be available in this Jan Suraksha platform. Next, if you see that enrollment and achievements, this is important, the enrollment and achievement. So till now, there are 51.06 crore cumulative accounts or enrollments. Claim payout released is 3,121, and total claims paid is what? 1,57,000. So you can see that enrollment here is more, right, as compared to Jeevan Jyoti Bima Yojana. And if you see woman inclusion, so woman inclusion is what? 23.87. Out of this 51.06, 23.87, this is your female subscribers, right? Okay. After we have seen Jeevan Jyoti Bima Yojana and Suraksha Bima Yojana, let's talk about Atal Pension Yojana. So in case of Atal Pension Yojana, again launched on the same date, 9th of May 2015. So it has completed a decade now. It even though it was launched on 9th of May, it was operational from 1st of June 2015, right? So what is the objective of Atal Pension Yojana? So in Jeevan Jyoti Yojana provides life insurance, Suraksha Bima Yojana provides accidental insurance, Atal Pension Yojana would provide what? Retirement income security to workers in the unorganized sector, and also it encourages what? Voluntary pension savings, right? Who is the target group? Unorganized sector workers of the age 18 to 40 years, right? Taxpayer restrictions. So since 1st of October 2022, income taxpayers are not eligible to join in the particular scheme. Then pension amounts, if you see that fixed monthly pension on attaining the age of 60 years, that is minimum pension is 1000 and the maximum pension is what? Rupees 5000. Okay. So this defined pension benefit scheme, it is a defined pension benefit scheme. That means the pension will depend upon the contribution. Okay, it will depend upon the contribution and the age. So minimum pension is 1000 and the maximum is 5000. Minimum contribution period is 20 years or more. That is why 40, even if a person enters in 40, he will cover what? 20 years, right? He will cover 20 years. So that is why the minimum contribution period is 20 years or more. Contribution variation, it depends upon the age of entry and also the desired pension. Someone who desires 1000 will not have the same contribution as someone who desires 5000, right? And also it will depend upon the age at entry. So at age entry, approximately you can say 42 to 210 per month. So 42 is for 1000, 210 for 5000 pension. Similarly, at age 40, approximately 291 for 1000 and 1454 for 5000 pension. Here also there is this auto debit facility, but it can be taken up either monthly, quarterly, half yearly payment. Okay. And whereas if you see in case of Suraksha Bima Yojana and Jeevan Jyoti Bima Yojana, the auto debit was annually, right? Auto debit is annually, but in case of Atal Pension Yojana, it is either monthly, quarterly, or half yearly. Then who administers this particular scheme? PFRDA, since it is association with pension, so it is administered by PFRDA. Now, if you see about the current thing, that the total subscribers is 7.65 crore subscribers. Total corpus that has been mobilized is 45,974. And women participation out of the total, the 7.65 crore subscribers, 48% is what? Women. Death and family pension on subscribers' death, spouse will receive the same pension, and after the spouse's death, nominee receives the accumulated corpus. Exit at 60 years, then full lifelong pension begins. And if the exit is before 60 years, it is allowed only in case of death of the subscriber, or if the subscriber is terminally ill. In that case, only the voluntary exit is allowed. Okay, then in that case, what happens if there is voluntary exit? Then only subscriber's pension is returned. Okay, plus the interest earned on that corpus is returned. Government contribution is not returned to the subscriber. Okay, right. So what else you can see from this particular scheme? Yeah, these are the major points that we have seen regarding four schemes till now we have seen, that is Jan Dhan Yojana, Atal Pension Yojana, Jeevan Jyoti Bima Yojana and Suraksha Bima Yojana. One more important scheme from the Ministry of Finance is this Mudra Yojana, right? So even Mudra Yojana has completed a decade this year. It was launched on 8th of April 2015. The major purpose is to provide collateral-free loans to small and micro enterprises who lack access to institutional credit, right? So what kind of loans will be provided, or for what kind of activities the loans will be provided to the small and micro enterprises? So loans would be provided for non-farm, non-corporate income generating activities, right? And the loan limit, originally it was 10 lakh, but then since budget 2024-25, it has been enhanced to 20 lakh. And the new category is known as what? Tarun Plus, right? Then credit guarantee for micro units provides credit guarantee cover to the lending institutions. Okay. And there are four categories. This you know, isn't it? The four categories of Mudra loans: Shishu, Kishore, Tarun, and Tarun Plus, the new category. What are the sectors that are covered, or you can say what are the sectors for which loan is provided under Mudra Yojana? So manufacturing, services, trading, Allied activities including poultry, dairy, beekeeping, etc. Not directly agriculture or crop science is not given, but allied activities are taken. Okay. Then, if you see about the current related aspects, so how many crore loans are sanctioned? That is 52.37 crore loans sanctioned, and the total amount sanctioned is 33.65 lakh crore. Right. Out of this 33.65 lakh crore, 11.58 lakh crore has been sanctioned to SC, ST, BC entrepreneurs. 68% total loans have been sanctioned to women borrowers. Okay, and if you see the minority borrower performance, so Shishu loan is what? 1.25 lakh crore. So Kishore loan is 1.32 lakh crore. So Kishore loan now it is you can say maximum loan or maximum sanctioned thing is in Kishore only, na. But if you see about the category wise loan share, the number of loans that has been sanctioned, so it is highest is your Shishu. So value wise it is Kishore, value wise Kishore, but number wise it is Shishu, right? Okay. Mm, Again, if you see this one, amount sanctioned, as I was talking about, Kishore amount sanctioned wise, Kishore has the highest amount because this one you see it's very clearly visible 1.32 lakh crore, followed by Shishu 1.25 lakh crore. So, amount wise it is Kishore, but number wise it is Shishu. Okay. And special initiatives under Mudra Yojana is this credit guarantee fund for micro units, which was launched in 2016, plus 2% interest subvention on the Shishu loans in financial year 2021 under the Atmanirbhar Bharat package. Okay. Right. Next scheme under Ministry of Finance is your sovereign gold bond scheme, which is issued actually by RBI. Okay, and on behalf of what? On behalf of Government of India. So this is actually it provides an alternative to physical gold investment. What we do, what we Indians do is that we buy gold and we then save it. I mean, keep it in our lockers, right? So in order to prevent that, this is an alternative. This sovereign gold bond scheme is an alternative to that physical gold investment and to reduce the demand for the physical gold, right? So where this sovereign gold bond will be sold, this will be sold in designated scheduled commercial banks and CCIL, then designated post offices, National Stock Exchange and Bombay Stock Exchange, right? Who will be eligible? Resident individuals, Hindu undivided family, trust, universities, and charitable institutions. And denomination, that means what is the limit? Okay. The gold can be purchased in terms of gram, not the physical gold. I'm talking about the bond. Okay. So it will be in multiples of gram, and the minimum unit is what? 1 gram. Okay. Minimum unit is 1 gram. What is the tenor? The tenor is 8 years. That means the bond will be matured in 8 years. Early exit option is available from the fifth year onwards on interest payment dates. Minimum investment is 1 gram of gold, and the maximum investment is also there for individuals. It is 4 kg per year. For Hindu undivided family, also it is 4 kg per year. Whereas for trust and institutions, it is 20 kg per year. Then next, if you see what is the issue price determination, so that is the simple average closing price of 999 purity gold, right? Then digital discount is there, 50 rupees per gram discount if there is if somebody goes for online subscription with digital payment, then they will get 50 per gram discount. Okay. And demat facility is there. It can be converted to demat form. The interest rate, if you see, interest rate, so it is 2.5% per annum. Interest rate 2.5% per annum, which is payable in semi-annually on the nominal value of the gold, right? Semi-annually. Then this particular bond is also eligible as collateral for loans. So we can use this bond as a collateral for loans, right? Interest is taxable as per Income Tax Act, okay, but the capital gains on redemption exempt from for individuals. Okay. Then yeah, so these are the most important points related to sovereign gold bond scheme, right? Even though sovereign gold bond scheme recent issues have not been launched or issued by RBI, but still you should know the important points. That is why these things have been highlighted, right? Okay, next ministry that we'll see is the Ministry of MSME. So first of all, let's talk about PM Vishwakarma Scheme. Too much in news, right? So when was it launched? 17th of September 2023 on the Vishwakarma Jayanti. And the implementation is for, this is very important. Huh? Implementation of the schemes are also very, very important. Kab launch hota hai and what is the duration of the scheme is important. So the duration is from financial year 23, 24 to financial year 27, 28. Total financial outlay is 13,000 crore, right? So what is the purpose of the scheme? It will support the traditional artisans, craftspeople, one who are known as what Vishwakarmas through recognition. So how they will be supported? Number one, through recognition. Number two, by skill upgradation. Number three, providing them with modern tools. Number four, credit support. Number five, brand promotion. And number six will be the market linkages. So these are the ways in which this PM Vishwakarma scheme will be supporting the traditional artisans. So core vision is about turning traditional artisans into successful micro entrepreneurs while preserving the heritage crafts of India. So who are the target beneficiaries? The traditional artisans and craftsmen engaged in family-based manual trades from 18 trades, isn't it? 18 trades. Now, what are the implementing ministries? So, Ministry of MSME, Ministry of Skill Development, and Ministry of Finance. Okay. So, administrative structure, if you see the district project management unit established across districts for awareness, registration, trading, coordination, and monitoring. And these district project management unit, there are 497 units covering 618 districts. Right. Next, we'll talk about the beneficiary eligibility conditions, that the beneficiary must be working with bare hands and tools since it is a traditional craft. Okay, so machinery is not allowed. Must belong to one of the 18 notified trades. Minimum age of 18 years. Should be self-employed or unorganized sector worker. No government job in the family. Should not have taken similar government business loans in the last 5 years. Okay, this last 5 years is important, and only one eligible member per family will be supported under this particular scheme. So family here defines as what? Husband, wife, and unmarried children. Okay. So this is the eligibility conditions for the beneficiaries. All right. Next, what you will see? Beneficiary recognition. I told you that they will be supported by recognition, skill upgradation, tools, isn't it? First one was recognition, skill upgradation. Second, third is their modern tools. Then there was credit also, isn't it? Then branding, and lastly we had marketing. So these were the interventions. So number one, beneficiary recognition. There will be what? PM Vishwakarma ID and digital certificate acknowledging the traditional trade and skill identity. Skill development, the second intervention. So basic and advanced training would be provided. So you know that the credit that will be provided will depend upon this training only. Okay. So daily stipend during training will be rupees 500 during the training. Then toolkit support. So one-time financial assistance of rupees 15,000 will be provided through e-voucher for purchasing the new and modern tools. Okay. Then credit support. So collateral-free enterprise development loans will be given in two tranches. The first loan will be rupees 1 lakh. Duration is 18 months, and this will be given only after the completion of the basic training. That's why I told you that the skill development, the basic and advanced training is linked to the credit support. Because once they complete the basic training, then only the first tranche of loan of 1 lakh will be given, which has to be repaid within 18 months. Next, second loan is of 2 lakh rupees, and it has to be repaid in 30 months. It will be availed only when the first loan has been availed and the beneficiary has adopted what? Digital transactions or has completed advanced training. Okay, right. So what are the conditions for second loan? Number one, if they have availed the first loan. Number two, if the loan account remains standard. Number three, if they have adopted digital transactions. Number four, if they have completed the advanced training. Okay. Now, what is the interest rate? Final interest that will be charged to the beneficiary is 5%, and the government provides intervention of 8% to the banks. Rupee 1 per digital transaction will be provided to the beneficiary, and up to 100 transactions would be permitted per month. That means yearly 1200, right? 1200 would be provided for what? Digital transactions, right? Next, what are the other things? So marketing and marketing support. So quality certification support will be given, right? Online onboarding on e-commerce platforms like GEM, this kind of supports will be given. Then Udyam Assist portal. So beneficiaries are assisted in formalizing their business. Now, since we have seen in the eligibility only it is given, they should either be self-employed or should be as unorganized sector worker. So this particular scheme will help them in formalizing their business via the Udyam Assist platform to obtain what? Udyam registration and MSME certification. Priority will be given to women, SC, ST, OBC, Northeastern states, person with disabilities, island and hill region residents, and also other underserved groups, right? Then, if you see, the scheme is active across the country with across southern, western, central, northern, eastern states. And the top registered states are what? The top registered states are Karnataka, Maharashtra, MP, Rajasthan, and Andhra Pradesh. Whereas, which kind of trades are most registered? Number one, Rajmistri or Masonry, tailor, then garland maker, and carpenter and cobbler, right? So these are the five trades which are most registered. And these are the five states which are most registered. So these 2 points are very, very important from the current aspect. Okay. Next scheme under Ministry of MSME is your Self-Reliant India Fund. So what is this Self-Reliant India Fund, or why was there a need for the Self-Reliant India Fund? So the point, if you see, to solve the lack of equity financing, help MSMEs grow, support corporatization, and encourage them to scale sustainably, there was this Sri Fund launched, right? So therefore, Sri Fund provided capital, right? There was capital through what? Daughter funds to MSMEs. Now you know that MSMEs need credit, right? But as such, working capital is one thing. Okay, working capital is one thing. But equity financing is one thing. Equity financing होने से क्या होता है? It is actually like working capital and equity financing. So there are loans which are available for working capital of this MSMEs, right? But MSMEs actually needed what? Equity financing. So how they would be getting? Through this Sri Fund. So Sri Fund does not actually invest into the MSMEs. Rather, they invest into what? Into the daughter funds. And these daughter funds will invest into the MSME. Okay. So this is what you see that what is the objective of Sri Fund? It is to grow the capital through what? Daughter funds to MSME in equity or quasi-equity form. Okay. Support listing on stock exchanges, enable faster growth, promote new national, international campaigns, strengthen Atmanirbhar Bharat. So they will be growing the equity financing of the MSMEs. Okay. The specific goal is what? To promote MSME growth and job creation, support scalable MSMEs that lack growth funds, encourage production of technologies, goods and services, enhancing self-reliance. So who will be eligible for this funds? MSME is defined under MSME Development Act, and they must demonstrate viability, scalability, and positive cash flows. Who are not eligible? Non-profit bodies, NBFCs, microfinance institutions, financial intermediaries, SHGs, they will not be eligible. The fund structure, it is a fund of fund model. As I told you that actually this Sri Fund will fund the daughter funds, who in turn will fund the MSME. So therefore, it's a fund of fund model, right? Mother fund invest in daughter fund. So Sri Fund is the mother fund who will invest in daughter fund, and then this daughter funds would invest in MSMEs as equity or quasi-equity, right? And both the mother fund and daughter fund will be registered with SEBI as category 1 or 2 alternative investment fund. Now, mother fund, that means the Sri Fund, it has a fund size of 10,000 crore. Okay, does not invest directly in the MSMEs. It empanels daughter funds and it will provide the leverage funding. So this one you see, the Government of India contribution 10,000 crore to the mother fund. Daughter funds must raise 80% of the total funds, after which 20% would come from the mother fund. So this 10,000 crore, it will actually fund only 20% of the daughter funds. Okay, rest 80% has to be raised by the daughter funds. Thus, the 10,000 crore mother fund enables 50,000 crore total investment deployment. Do you understand? That is how the capital grows. Because if working capital is provided, then only one particular MSME or something like that will be getting the capital. But here, since this is a fund of fund kind of model, so 10,000 crore fund actually helps in mobilizing 50,000 crore investment, right? So if you see about the minimum sanction per daughter fund will be 25 crore and disbursements in multiples of 5 crore. So minimum 25 crore and then disbursement can be what? Multiples of 5 crore. Daughter fund must deploy mother fund's capital within 2 months. 1 month extension may be granted, otherwise funds must be returned with possible interest penalties. What is the total tenure of the fund? It is 15 years. Okay, due to long exit cycles in the MSME sector, it's a long-term fund that is 15 years with a commitment period up to 6 years from the last closing. Fund managers criteria, they must have minimum 5 years experience in growth funding and minimum 500 crore fund management experience. Plus, they must have what? Proven performance track record. Okay. Now, who are the institutions that will be promoting this MSME investment ecosystem? Bank, PSUs, pension fund, industrial development corporations. They can mentor the MSMEs, they can invest directly in the MSMEs, or they can invest in the daughter funds. So these are the institutions, the banks, PSUs, pension funds, and industrial development corporations will be actually promoting the investment ecosystem. Okay. Next, this is, I told you already, that daughter funds will be either category 1 or category 2 SEBI registered AIF. So from the NABARD perspective, this much is more than enough from the street fund. Okay. Next, we'll see about the credit guarantee fund trust for micro and small enterprises. This is more important for us. Why? Because in many other schemes, this credit guarantee fund trust for micro and small enterprises provides credit guarantee to the lending institutions, right? So that is why this becomes very important. So when was it established? Established in 2000 by the Ministry of MSME and SIDBI, and it provides what? Collateral free credit guarantee to the micro and small enterprises. Okay, so it supports both fund as well as non-fund based limits. Then if you see the credit limits, okay, eligible credit limits up to 10 crore by PSBs, private banks, foreign banks, and selected financial institutions. Up to 200 lakh by the small finance bank, RRB, okay, then district central cooperative banks, state cooperative banks, and state urban cooperative banks, and up to 50 lakh for the microfinance institutions. So this is the credit limit. This is important. The credit limit is important. Okay. Credit facility must be standard. Another important point that whatever credit facility who wants to get the credit guarantee coverage under this particular fund, they must be of the standard category. Next is all MSc including trading are eligible. Sorry. Educational and training institutions are not eligible. Okay. Then multiple lending institutions, joint or separate financing allowed up to 10 crore per borrower. Then what is the guarantee tenure? Term loan for the duration of the loan, and working capital, it should be 5 years renewable every 5-year block. So if it is a term loan, then during the term of the loan, it will be guarantee cover will be available. Even if it's a working capital loan, then for the 5 years it will be available. Okay. Next, if you see annual guarantee fee, this is important, but you just have to see it simplified. That slab-based rates 0.37 to 1.2. Okay, this is just remember this thing, that slab-based rates, annual guarantee fees, slab-based rate 0.37 to 1.2. And 10% discount is applicable for women, SC/ST, physically handicapped or physically disabled, transgender Agniveers, units in Northeastern Jammu and Kashmir, Ladakh, aspirational districts, integrated districts, then ZED certified MSMEs, maximum 30 combined discount. Okay, so important kya hai? Each of these will get 10%. Like this category will get 10%. This category will also get another 10%, and ZED certified MSMEs will get 10%. So maximum combined discount will be 30%. That means suppose in this way you can consider, suppose a woman living in Northeastern region and running a ZED certified MSc will have what? 30% discount. Right? Will have 30% discount. But suppose a SC woman uh, from Northeastern region of a ZED certified MSc, then also it will be 30% only. Okay, even if it should have been 40, but since we have a limit of 30%, so therefore even if it is a SC woman or ST woman or trans gender in Northeastern region, okay, then also it will be what? 30% only. So that 30% is the cap. All right, so that much is important from the credit guarantee fund trust for micro and small enterprises. Next, we'll see about the cluster development program. So if you see this cluster development program, it has a long journey actually, right? It started in 1998 as UP Tech, then it was renamed in 2003, and then in 2006 again it has been revised, right? From our perspective, what is important is that in line with the promotional package, SICDP renamed into Micro and Small Enterprises Cluster Development Program, project size raised up to 10 crore with 75% government funding. So this is important that project size actually according to this SICDP it was 8 crore project size, right? But then when it was renamed as MSA CDP, then the project size was increased to 10 crore. So this is important. Project size 10 crore with 75% Government of India funding. Okay. Then what are the key components of this MSc CDP? Diagnostic study report, soft interventions, detailed project report, hard interventions, and infrastructure development. So if we talk about this diagnostic study report, funding up to 2.5 lakhs. Okay. And it has to be completed in 3 months. Minimum participation required, minimum 25 units participation is required for soft interventions. Okay. And this minimum requirement is 20 in case of backward tribal women SC/ST clusters. And soft interventions budget is 25 lakhs. Then stakeholder contribution minimum 10% by cluster beneficiaries has to be given. Okay, and state contribution will be allowed as gap funding. Soft activity duration maximum 8 months. 18 months. So that these things are not that very important. You can just see this one, yes. Support for women entrepreneur bodies. Okay, so associations can set up exhibition centers with Government of India contribution up to 40% of the project cost. Okay, up to 40% of the project cost forward women entrepreneur bodies. Right. Next, we'll move to Ministry of Skill Development and Entrepreneurship Skill India Mission. Very, very important again. Why? Because it has completed a decade this year. Right. So National Policy for Skill Development and Entrepreneurship 2015 laid the foundation for a large scale ecosystem which was focused on empowering citizens through skilling high standards entrepreneurship development. Right. So what is the vision of this particular policy? That is to create an ecosystem for large scale skilling with speed, scale, and standards. So accordingly, this Skill India mission was also launched, which is a national umbrella mission delivering skill, reskill, and upskill programs across India to make the Indian youth future ready with industry relevant skills, right? So when we talk about the Skill India mission, it's a demand driven approach. Participation is voluntary and it is delivered through extensive network of training centers and institutes across India. Again, one of the major point from this particular scheme is the major schemes which are there under this Skill India mission. What are the major schemes? Kaushal Vikas Yojana, Jan Shikshan Sanstha, NAPS, that is National Apprenticeship Promotion Scheme, and Craftsman Training Scheme. So these are the schemes which are the components of Skill India mission, right? So if you see the institutional ecosystem for training delivery, so they will be training will be delivered through this Kaushal Vikas Kendra training centers, Jan Shikshan Sanstha institutes, apprenticeship establishments, including your industrial training institutes and other approved skill bodies. Okay. Recognition of prior learning under PMKVY. Okay. So out of that 70.42 lakh trained individuals have been trained under this recognition of prior learning. Okay. And also you will see what is the role of this NCVET, that this NCVET acts as an overarching regulator for technical and vocational education and training. Okay, National Council for Vocational Education Training acts as an overarching regulator. What it does is that it sets legislation, certification standards, recognizes key skilling bodies, and also ensures the quality in assessment, qualification, training, and certification. Right. Then let us talk in details about Kaushal Vikas Yojana, about Jan Shikshan Sanstha, about National Apprenticeship Promotion Scheme. So first is your Kaushal Vikas Yojana, and we know that we are in the PMKVY 4.0, right? So when was it launched? Since 2014, right? It was launched in 2014, and it has since 2014 it has trained over 6 crore Indians through multiple schemes. Then Yeah. So restructuring of the Skill India Mission 2025. So in February 2025, the government has merged the KVY, PMKVY 4.0, NAPS, Jan Shikshan Sanstha into one unified central sector scheme for efficiency and standardization. And what will be the duration of this particular central sector scheme? That is 2020 to 23 to 2025-26. This will be known as the Skill India program, right? So, what are the key schemes under the Skill India program? Kaushal Vikas Yojana, Jan Shikshan Sanstha, National Apprenticeship Promotion Scheme, and Industrial Training Institutes. So, under Kaushal Vikas Yojana, what is the objective? It is to provide short-term skill training, recognition of prior learning certification, rural and urban inclusion, improved employability, and alignment with the industry needs. Then, if you talk about the Jan Shikshan Sanstha, the target group is 15 to 45 years, right? Target group 15 to 45 years, non-literates, dropouts, women, SC, ST, OBC, and minorities. These are the target group of Jan Shikshan Sanstha. And if you talk about national apprenticeship, so it promotes both dual learning, that is basic plus on the job, right? Okay, so this is what we have seen regarding about Skill India Mission and Ministry of Skill Development Entrepreneurship, right? Now you see about Kaushal Vikas Yojana. When was it launched? 15th of July 2015. And Kaushal Vikas Yojana 2.0, 3.0, and now we are in the fourth phase, right? So two new centers of excellence has been created at the National Skill Training Institutes Hyderabad and Chennai so as to support high-end instructor development in emerging sectors. And under Kaushal Vikas Yojana, every certified candidate receives rupees 500 reward for clearing the assessment, right? And then also what we know that in Kaushal Vikas Yojana, there was this component, placement component was there up till Kaushal Vikas Yojana 3.0. From Kaushal Vikas Yojana 4.0, placement linked has been, placement component has been delinked, right? So under Kaushal Vikas Yojana, there has been a shift in the focus. There is lesser focus on direct placement marking, right? Instead, they will be what empowering the candidates with choice, access to opportunities via digital platforms, that is the Skill India Digital Hub. So the Skill India Digital Hub will actually work as a bridge. Sorry, which will integrate the skilling, education, entrepreneurship, employment. So it will work as a bridge between the job seekers and the job providers, or yeah, job seekers and the job providers, right? It will act as a hub. So accordingly, based upon the need, based upon the their choices, these trained candidates will be able to find their employment, right? So therefore there has been this shift in Kaushal Vikas 4.0 where the placement has been delinked, direct placement has been delinked. Rather, the placement or access to opportunities would be provided via digital platform, that is your Skill India Digital Hub, right? Then, if you see about the inclusivity focus, so Kaushal Vikas Yojana makes sure that all the sections of the society are included. As a result, 45% trainees are women, and there is also a large participation from SC, ST, and OBC communities. Expansion to high-tech sectors, that is artificial intelligence, Internet of Things, drone technology, robotics, mechatronics, coding, advanced industrial operations. These things have been included. Okay. Special projects, that is regional inclusion, Bhu tribe training in of Tripura, jail inmates of Assam and Manipur. Okay, under the Punk project. Under the Punk project. Okay, so this is Punk project is a special project. Okay, right. Next, if you see that this Kaushal Vikas Yojana has contributed to major government schemes like Surya Ghar, Jal Jeevan Mission, Vibrant Villages Program, Beti Bachao Beti Padhao, Green Hydrogen Mission. Right. Okay. Next scheme is your National Apprenticeship Promotion Scheme. It was launched in August 2016, and we are in the second phase of NAPS. Okay, it's a part of the Skill India mission, as we have already seen. So, what is the main purpose of NAPS? That is to promote participation of industries in apprenticeship training, enhance employability of the youth, and also to bridge skill gaps in the industrial ecosystem, right? What is the financial assistance, or you can say financial incentive, that will be provided under NAPS 2? That the government provides partial stipend support. Okay, 25% of the minimum prescribed stipend will be payable, which is what, maximum 1500. 25% of the minimum prescribed stipend will be payable, which is what, rupees 55 1500 or rupees 1500. Sorry. Then what are the things? If you see about the financial target in 2025-26, that is 30 lakh apprentices are targeted to be engaged in the year 2025-26. And as on July 2025, 3.9 lakh apprentices have already been engaged, and 21 lakh 47,000 apprentices have completed their training. Okay, now how many sectors are covered? This one, 49 sectors, which includes automotive, then IT, ITS, electronics, retail, production, manufacturing, biotechnology, renewable energy, and telecommunications. So what is the minimum eligibility age? I mean the eligibility, age-wise eligibility. So that is 14 years is minimum for general trades, and for hazardous industries, it is 18 years. Okay, so they may confuse you. They may put up this hazardous industries in the statement, and they may ask you what is the minimum age. Then you have to write what? 18 years. Okay, minimum education requirements. So age criteria we have seen. Next is education, that is minimum fifth standard and required classification as per trade curriculum. Okay, online registration can be done using this portal, Apprenticeship India portal, using Aadhaar or unique identification number. And this National Apprenticeship Promotion, the legal basis is this Apprenticeship Act 1961, which was amended in 2014 and then again in 2019. What are the establishments? What is the eligibility for the establishment? Now, we've seen that eligibility for the apprentices, we've seen age wise and also educational qualification wise. But what is the eligibility for the establishments who can engage apprentices? That all establishments with 4 or more employees, they can engage apprentices, and establishments with 30 or more, for that, for those kind of establishments, engagement is mandatory. Okay. So these are the things that you needed to know regarding your National Apprenticeship Promotion Scheme. Now, if you see about Jan Shikshan Sanstha, it was launched as Shramik Vidyapit in 1967, and basically to provide what non-formal skill training at the doorsteps through NGOs with 100% Government of India, right? Uh, the target beneficiaries, who are the target beneficiaries? 70% are non neoliterates with basic education holders, 20% school dropouts up to class 12, 10% graduates in the age group of 15 to 45 years, and this age relaxation has been there for Divyangjan and women. Okay, so these are the target beneficiary group. Then the Jan Shikshan Sanstha will be registered as NGOs receiving annual grants and aid from the Government of India. What are the principles? Lifelong access to skills for non-literates and neo-literates and low education individuals. Skill courses must match with the local market demand and generate income. Courses must be flexible, diverse, adaptable to changing needs. Must remain affordable, accessible to all target groups. The courses should align with NSQF standard, and training to be delivered with community support at the beneficiary doorstep. Right. Next, if you see the types of activities which are taken up under Jan Shikshan Sanstha. Okay, so skill training, community awareness activities, capacity building programs. These are the activities which are being taken under Jan Shikshan Sanstha. Okay, right. Next, we'll see is that the capacity building of the Jan Shikshan Sanstha staff. That capacity building will be done through NSTI, NEBARD, IIE, IGNO, and other reputed institutes. Okay, medium of instruction can be Hindi, English, or any regional language as preferred. And fee structure, maximum rupees 100 per month. No fee will be applicable for SC, ST, Divyangjan, BPL, and EWS. And financing model, we have seen that the Jan Shikshan Sanstha will be running as a what? NGO, and they will receive annual grant. So what is the grant? That is grant of 50 lakhs plus one-time setup grant of 20 lakhs. Okay, the annual grant distribution, sorry. So rupees 20 lakh for emoluments, 24 lakh for program expenses, and 6 lakh for office expenses. Okay. So just have to remember that 50 lakh grant annually they will be provided. Okay. The Jan Shikshan Sanstha will work as NGOs, and they will be provided with 50 grant annual recurring grant. How many functional Jan Shikshan Sansthas are there? That is 293. Okay, 293. And highest you can say 21 in Bihar, Maharashtra, 29 in MP and Odisha. So that's all about your Jan Shikshan Sanstha. Okay. So I hope this session was helpful for you. Uh, in short, we have discussed the important schemes from Ministry of Finance, then MSME and skill development entrepreneurship. Okay, stay tuned to learn some more schemes on the second part of this particular session. Thank you.